Forex trading for beginners. As someone who has always been interested in exploring various investment options, I have found Forex trading to be a fascinating and potentially lucrative endeavor. In this video, I will delve into the basics of Forex trading, providing you with a comprehensive introduction to this dynamic and exciting market. What is Forex trading? Forex trading, also known as foreign exchange trading, involves the buying and selling of currencies on the foreign exchange market. Unlike the stock market, which focuses on the trading of stocks and securities, the Forex market is dedicated to currency trading. The primary goal of Forex trading is to profit from the fluctuations in exchange rates between different currencies. How does Forex trading work? In Forex trading, currencies are always traded in pairs. For example, you might trade the euro against the US dollar, represented as EUR/USD. When you buy a currency pair, you are essentially buying one currency while simultaneously selling another. The value of a currency pair is determined by the exchange rate between the two currencies. Factors influencing Forex markets. Several factors can influence the Forex market, including economic indicators, geopolitical events, and central bank policies. How to get started in Forex trading. If you are interested in getting started in Forex trading, there are several steps you can take to begin your journey. 1. Education. Take the time to educate yourself about the Forex market, including its fundamentals, trading strategies, and risk management techniques. Also make sure to hit the like button, as it allows for our team to continue to produce more free content on. Choose a reliable broker. Selecting a reputable Forex broker is essential for your trading success. Look for brokers that offer competitive spreads, a user-friendly trading platform, and excellent customer support. Practice with a demo account. Before risking real money, practice trading with a demo account. This will help you familiarize yourself with the trading platform and test out different trading strategies. Advantages of a demo account. 1. Training. Trade Forex without risking your real money. 2. Test strategy. Test your strategies on a demo account before going live. 3. Test environment. Test your trading conditions like broker latency, swap rates, etc. 4. Training. Test your trading software, its functions and short keys before going live. 5. Confidence. Gain confidence when trading. 6. Risk-free learning. Trade without using your funds. First, let's dive into the world of technical analysis. Before diving into Forex trading, familiarize yourself with essential terms that form the foundation of this market. Currency pair, a pair of currencies traded in Forex such as USD/JPY or USD/CAD. Pips, the smallest price move that a given exchange rate can make. Leverage, a tool that allows traders to control larger positions with a smaller amount of capital. Margin, the amount of money required to open a leveraged position. Stop loss. Order, an order that automatically closes a trade at a predetermined price to limit potential losses. Next, we explore the fundamental analysis strategy. This approach focuses on economic indicators, interest rates, and political events that can affect a country's currency strength. By understanding these elements, traders can make more informed predictions about currency movements. Another powerful strategy is the use of leverage. Leverage allows traders to control larger positions than their actual invested capital would allow, amplifying both potential gains and losses. It's crucial to manage leverage carefully to avoid significant risks. Lastly, let's not forget about risk management techniques. Setting stop-loss orders and taking profits at predetermined levels can help protect your investments from sudden market shifts. What is liquidity in Forex trading? Liquidity refers to the ease with which an asset, such as a currency pair in Forex trading, can be bought or sold without causing a significant change in its price. In simpler terms, liquidity is the degree to which an asset can be quickly converted into cash without impacting its market value. The Forex market is known for its high liquidity, with trillions of dollars being traded daily, making it one of the most liquid financial markets in the world. Importance of liquidity in Forex trading. Liquidity plays a vital role in determining the efficiency and stability of the Forex market. High liquidity means that there are enough buyers and sellers in the market, allowing traders to enter and exit positions with ease. This ensures that prices are more stable and that orders can be executed quickly at desired prices. On the other hand, low liquidity can result in wider spreads, increased price volatility, and slippage, which can impact your trading performance. Definition. The foreign exchange market is a worldwide market for currency trading. It involves trading between a range of buyers and sellers around the clock, except for weekends. It regulates the relative values of different currencies. Key essentials. Leverage. It is when a firm avails an amount of debt or loan to finance its assets. Margin. the minimum installment the trader requires to commence an exchange in the Forex market. Equity. It is the at-hand balance in a trading account, evaluated after a profit, loss from open positions. How liquidity affects trading strategies. For beginners in Forex trading, understanding how liquidity impacts trading strategies is essential. High liquidity pairs, such as major currency pairs like EUR/USD, offer tighter spreads and lower transaction costs, making them ideal for beginners. These pairs also tend to have more predictable price movements, making it easier to analyze and trade them effectively. On the other hand, exotic currency pairs with lower liquidity may have wider spreads and higher transaction costs, making them riskier for beginners. Trading illiquid pairs can also result in difficulty in entering or exiting positions, as there may not be enough market participants willing to buy or sell at the desired price. Why liquidity matters to beginners. As a beginner in Forex trading, understanding and considering liquidity is crucial for several reasons. Firstly, trading highly liquid pairs can help you minimize trading costs and improve your overall trading performance. Secondly, high liquidity ensures that your orders are executed quickly and at the desired price, reducing the risk of slippage and order rejections. Moreover, by focusing on liquid pairs, beginners can gain valuable experience in analyzing market movements and developing effective trading strategies. As you progress in your trading journey, you can gradually explore trading less liquid pairs while maintaining a solid foundation in high liquidity markets. Embarking on your Forex trading journey as a beginner may seem daunting at first, but with the right approach and resources, you can navigate the stock market with confidence and skill. By understanding the basics, mastering key terminologies, and following practical tips, you can set yourself up for success in the dynamic world of Forex trading. Remember to stay informed, stay disciplined, and continuously seek knowledge to thrive in this exciting market. In conclusion, liquidity is a fundamental concept in Forex trading that beginners need to grasp to navigate the stock market successfully. By understanding the importance of liquidity, how it affects trading strategies, and why it matters to beginners, you can make informed decisions and enhance your trading experience. Remember to focus on trading highly liquid pairs, manage your risks effectively, and continuously educate yourself to become a successful Forex trader. Happy trading! Now that you have a solid foundation on how to get started in Forex trading, take the first step towards achieving your trading goals and embracing the opportunities that await in the world of currency trading. Happy trading! By mastering these advanced strategies, you're not just trading, you're strategically positioning yourself for success in the volatile world of Forex. Remember, continuous learning and adaptation are key in staying ahead in Forex trading. Please like, comment, and share the video to foster community engagement. Subscribe to our channel for more educational content on Forex trading and provide links to additional resources or recommended tools in the video description for further exploration.